So looking at the market today, we have NQ on the left, ES on the right. Basically, we had this 1 hour fair value gap on both right here. We had a sell side level sitting in there, and basically we came down, wicked below that level, swept it, and then came all the way up to this buy side level. So that was the morning manipulation. And so looking at NQ, because ES's price action was pretty horrible, zooming in a bit, the move of the day was this. So we had these lows here that we swept. This main low, we took that out, and we formed this little unicorn model, right? So you have this breaker here, this candle right there, right? You have the 1 minute fair value gap here, and you have an inverse fair value gap there as well. So originally I was looking to take a long here, but I saw there was an SMT at the highs, which, you know, it's not really an SMT, rather just one indice being slower than the other. But, you know, at this point we had already taken out this high here. This was our SMT. So I didn't know if ES wanted to come back down, maybe have one more manipulation move, so I was being a little cautious, because if ES wanted to do that and dump here, well, since NQ made the lower low, I would assume NQ would go even lower, or sorry, the lower high, I would assume NQ would go even lower than ES. So I was just a little skeptical. Didn't end up taking long, we bounced. And then we came back down into here, we formed, you know, so we had this little bullish SMT here. Alright, so if you see, we had this bullish SMT at this low. Alright, but basically regardless, I was looking for us to take out this low and have a little internal model. So once I saw we formed equal lows, I was definitely not going to slap a long in here, because, you know, equal lows like to be taken. So what I really wanted and what I was waiting for was us to, you know, bounce up here or something, come back down, have like another little manipulation move, and then have this displacement here, and I would have taken, you know, a smaller time frame fair value gap here, then targeting all the way to the external. But that didn't end up happening. We ended up just forming equal lows. If you longed in that 1 minute, that would have been great. You know, you could have targeted all the way to that external. That was the move of the day. And everything after that was pretty bad. But so whatever, I missed out on that opportunity, but I wanted to see the internal model, so I'm not, you know, upset with that. Zooming out, once we break up here, that's your you know, higher time frame, you know, 5 minute market structure shift. And then we have this inverse, this 5 minute inverse, which perfectly overlaps with this 5 minute fair value gap here. So I was like, alright, you know, maybe we'll have an opportunity for a long here. And we basically came down, you know, wicked off of it, formed your little internal model here. And, you know, we had some 30-second fair value gaps, these 15-second fair value gaps. And I basically just had way too tight of a stop. You know, I longed. There was a 30-second fair value gap here, and I longed right about the consequent encroachment. So we had this, and if I show you the middle line, I placed a limit order right in the center of that 30 second. And I was a little just too zoomed in, and I was like, alright, I'm putting my stop below the bodies of this 15 second. You know, I want us to just rip. But I think that was just a little ridiculous. I mean, if I take the fib, right, what did we do? We came right down into OTE of the range and then bounced. So I put my stop loss in OTE, which doesn't make any sense. I put my stop in the optimal trade entry, where you want to enter the trade. So it just doesn't make sense. I should have at least had my stop below the bodies of this candle, because if you're looking at the 1 minute, you know, my stop was like here. That doesn't make any sense, right? If I'm playing this 1 minute fair value gap, my stop at least has to be under the bodies, if not this low or below consequent encroachment of this wick here. So at least below the midpoint of that wick. Same thing, targeting that external draw. So the analysis, the analysis was good. The execution was just a bit poor. I just wanted to keep risk tight, and it was just, it was just stupid to put my stop here. But you live and you learn. Yeah, there's no reason for me to have a 6R on this trade. Putting my stop all the way down there, I still have a 2. Down here, still have a 3. There's just no reason for me to try to have the smallest possible risk ever. But hey, that's what I did. So I took a loss there. And then once we took out this level, this buy side level, I knew, we had the morning manipulation, and then we ripped to the upside. We took out this would be the external level in this model. I knew at this point, trades are going to be pretty garbage for the rest of the day. We actually did end up rallying much more, but there weren't really any great setups in my opinion. But if you zoom out back to we'll go to the 1 minute. So I was using this standard deviation. I'm trying to use this a bit more. So this is like the main market structure shift here to this high. And so I drew out the 2 to 2.5 standard deviation. We also had a pretty big SMT at the time at these highs. NQ took out this high all the way over here. ES was nowhere near taking this high at this point, right? ES was down here when NQ already took the high. So really big SMT at the time. And we were kind of just chopping, sort of holding this area. So zooming in a bit more, or I guess we'll stay on the 1, but we had 5 minute fair value gap here, right? So if you see, there's no fair value gaps here. Where's the first fair value gap? Right here, this 5. If I look at the 15, no fair value gaps here. Where's the first fair value gap? Right here, the 15. And then zooming in a bit more, that was my bias to start to look for we might retrace in this area. We're holding 2 to 2.5, big SMT, starting to slow down a lot here. We're generating low resistance liquidity. We're starting to fail in terms of movement to the upside, and we are likely to rebalance to these fair value gaps. So this was my draw on liquidity, this low right here, which is right on top of the fair value gaps. So what we had was, we start to roll over a bit, we push lower. We had this 2 minute fair value gap. I'll go to the 30 second. So this was in discount of the range, or I guess technically premium, but the way I like to just think about it is discount means cheaper, right? Like if you're buying something at a discount, or it just means cheaper. So in my brain, it works better to say, you know, I'm looking for shorts, this is discount because this is a cheaper place to go short, if that makes sense. That's kind of the way that I think about it, but you know, technically this is premium of the range. But so whichever way you want to think about it, you pull back into premium of the range, and at this point, let me delete that. You know, we have all of these highs that we took, and if you think about it, it's sort of like a 3 drives pattern, right? You have this high, then you take it, big displacement. Then you take this high, displace again. Take this high, displace again. Maybe even 4 drives, whatever you want to call it. Take this high, big displacement, and you know, you clearly have a shift in market structure on this short time span. You know, if you're looking at this internal model, it looks pretty clear that you want to come down to these lows. You know, and so that was my bias. I see that we're starting to roll over. How does this fair value gap react? We reject it. So now once we reject this, I zoom in a bit more onto the 15 second. And so here's my bias, is that all of these are going to become low resistance liquidity. You know, the 2-minute fair value gap got respected. So this is your buy side of the curve, sell side of the curve. So the internal model that I'm playing is technically this, right? Let me bring out the curves a little bit so it makes more sense what I'm trying to say here. Not path, curve. And I'll make them blue so we can see them. So this is technically the model that I'm trading, right? This, you know, buy side of the curve, sell side of the curve. But what I was trying to do was I was trying to overlap the models, right? So this is the model that we were looking at before, where we rejected the 2-minute fair value gap. This is the model here, right? So let's just make these different colors. You have this low down here. So this is the little internal model that I'm playing, which is targeting that low. But this internal model is part of this larger model, which is targeting this low, right? And then at that point, if we're going to take out this low, my ideology was we have this low resistance liquidity, 15-minute and 5-minute fair value gaps just below. You know, if price is going to come all the way down here, I expect us to just manipulate these lows, rebalance to this fair value gap before bouncing. So that was pretty much my bias for this little short here. So then zooming in on the entry, I was like, this isn't clean action, so I was a little skeptical, and I didn't know if we wanted to go lower or higher. So we had this little 15-second fair value gap here. We tapped it, bounced, you know, rejected this sort of area here, and once this got ran through, so at least we pushed below it, I expected, let me just move this over, then we had this 15-second fair value gap here, so I expected us to push below and then respect this area because we had this inverse and then this 15-second fair value gap. So I expected that area to get respected. Had my stop above here, targeted the low, just a small scalp, 17 points. But we pretty quickly flushed down took out this low and started to have, you know, a little bit of a retracement here, but we ended up holding this 1 minute before pushing down to the downside. And also, just as a note, once we broke below this initial low right here of the little internal model that I was playing, stop got moved to break even, just because, you know, there is a possibility that we bounce off of this low. Or my stop was somewhere around here, just to cover, you know, your like $1 commission or whatever. So, but yeah, that was my little scalp. And then there was pretty much nothing else the rest of the day. I mean, I guess you could have played this long here, right, this little unicorn model, but it didn't even come all the way to this high. I definitely would have gotten stopped out at break even if I traded something like this and I was targeting that high. Definitely would have gotten stopped out here. But regardless, you know, it ended up coming to like this little fair value gap here, this little 1 minute. But even looking at this here, you know, you have all these lows here that got taken, right? This low as well. This low right here, and then all of these lows as well. But I wouldn't have taken a trade here anyway, because there's no like market structure shift. You're kind of just, I mean, I guess this is your accumulation, manipulation, you know, distribution this way. And so that's your little power of 3. So I guess, you know, it's not a bad trade at all. And you could have taken this fair value gap here, this 30-second. So I guess actually now looking at it, stop below the low, targeting this high up here. I guess looking at it, that's a pretty good scalp right there. But it was in the middle of lunch, and I try to stay away from trading during lunch. But other than that, I don't think there was really any trades to be taken, unless maybe you got some sort of short over here, but I wasn't a part of that. I was looking over here, this 5 minute. I was looking, you know, maybe we have a little internal model, because although externally there's no real like market structure shift, if you zoom in to a smaller time frame, you know, this is your buy side of the curve, sell side of the curve to take out this low. Very like valid way to trade in my opinion, but you know, because you're just trading the internal model off of the external fair value gap. But you know, there was no like setup here in my opinion. Like, I would have much rather have seen, you know, us come up, take this high or something, maybe have another manipulation move, right? Something like that, to take a fair value gap here. So we just kind of rolled over. I was not going to enter in that big fair value gap, and then we dumped off. So that's that for the rest of the day. So, you know, not bad. I'm okay not taking this long because of the SMT and then the equal lows. I think that's a pretty, you know, disciplined thing to do, and a lot of the times we do take equal lows, so I think it's perfectly okay for me to not take that trade. Maybe once you see like this, you know, we break above this high, you know, maybe at that point you'd say to yourself, like, all right, now the draw becomes higher rather than lower, and you can take something like that. But to me, it just wasn't what I wanted. This, I think, was a much better setup. I think this was even a better setup than down here, just because on the 5, it's now, blatantly obvious we want to go to this high. There's no debating it. Doesn't seem like we want to come back down here. You know, you have your market structure shift holding this fair value gap. It looks like we want to go here. I just played this poorly. You know, this is just me just not being okay with, you know, putting risk on the table. That, you know, me having that tight of a stop means like I'm only okay with, you know, this was like a $14 loss, but I wasn't willing to accept, you know, a $20-$30 loss. So I just wanted to keep the loss tight, but like that's just irrational. You know, that's a super tight stop, especially for the fair value gap that I was playing. So in the attempt to keep the losses small, I lost, right? So